It's Stock Curry, and in today's video, we're going to go over some technical analysis to show you why the markets are pointing to a rebound in both stocks and cryptocurrencies. In addition to that, we're also going to go over some Twitter news, and then we're going to get into your stock picks, and we'll do some technical analysis on your stocks as well. So, welcome to our live stream here on this Friday. Now, I know some of you in the United States, it's still Thursday, but most of you are going to end up watching this on Friday. So let's get into some of the technical analysis of what's going on and why I see a bounce in the stock market and cryptocurrencies coming up over the next few days, or at least the next few weeks. And I also wanted to let you know that, hindsight's always 2020. You can always look at stock futures or something like that. Well, yeah, I mean, stock futures are up 1%. Of course, market's going to go up. But of course, we put our money where our mouth was. And if you are part of the VIP Discord or you looked at what happened on Twitter, I pointed out how I actually sold some bullish vertical put spreads today, and those will go up so long as the QQQ, which is a NASDAQ 100 ETF, or the SPY, which is an S&P 500 ETF, trade either flat or go up. And with the markets trading pretty flat today, those are both up about 30% from where we bought them. And I'm hoping to be able to close them tomorrow when they expire for more than an 80% profit. So we'll see what ends up happening on that. So just hold off on your stock picks for a second. Let's get to the technical analysis and some of the market news, and then we will get into your stock picks. All right. Let's start with the QQQ, which is a NASDAQ 100 ETF. That's what I've got pulled up on my screen right now. Now, what I want to point out on this is right now we've got the daily chart. And what I did is I drew in the white up here a Fibonacci retracement level from the close today, that's the close Thursday, all the way up to the high back on November 22nd. So from the high to the low. And what I really like about the Fibonacci retracement level, it tells me this is actually going to be pretty accurate, because not only do we have two of the lines matching up almost perfectly with some actual support and resistance lines, but in addition to that, the other lines have also shown multiple support and resistance levels. So it shows that this is accurate, that the indice is actually using this to bounce up. So it's a pretty good indicator that we are, in fact, at the bottom. So one indicator is going to be the Fibonacci retracement level lining up with prior support and resistance levels. Another thing that I want to point out is that while we are not oversold on the daily chart yet, and while the MACD remains 100% bearish, and of course the EMAs remain 100% bearish as well, I want to point out the weekly chart, which is another indicator that we're probably going to get a rebound. Now, aside from the fact that on the actual day, we did bounce off of this support level here at $286. So it was a good bounce off of support. But what I want to show is the weekly chart, because this is where it gets really interesting. If you look at the weekly chart, you'll notice that we're at 29 on the RSI. Now, being at 29 on the RSI, anything under 30 means it's oversold. Now, on the weekly chart, QQQ, which is a NASDAQ 100 ETF, is pointing to oversold. I want to go back and look at the other times where we were oversold on the weekly chart of the QQQ. And the other times we were oversold was right here. And that was at the very bottom of the March 2020 crash, or the bottom of the March 2020 recession. That's where we hit it. And then we went up from there. Another time was over here. This is at the bottom of the 2018 recession. And once we hit it, we went up from there. And then if we go all the way back here, the last time we hit this, it was all the way back in the 2008 recession. Now, the 2008 recession, we actually hit the level right here. And it was about this week. And as you can see, it continued to go down significantly lower from there. In fact, it dropped about 50% from that point. And this is why there's really no guarantees when you have technical analysis. Well, yes, the last two times we hit the oversold level on the weekly QQQ chart, we did bounce and go back up. Back in 2008, we did not. We actually continued falling further. And then back in the dot-com bubble, when that burst, we actually hit that level multiple times. We hit it here. We hit it again here. We only got a 2-week rally there. Hit it again here. Only got a 2-week rally. Hit it again here. Well, we got a few more weeks out of that guy. And then we didn't. And then we hit it again here. Continued lower, and then got about a 3-week rally, and then hit it again. And then finally, that was the bottom. So the thing about technical analysis is, while it does point to, as you can see, the past couple of recessions, that we are probably at least a short-term bottom. Crap, I'm never going to get that back. Anyway, while it points to us being most likely the short-term bottom, it may only rebound for about 2 weeks before continuing downward, or it could do what it did back in 2000 and completely ignore it and just keep falling further. Same thing it did in 2008. But I think when you look at this, which is one indicator, and you look at the Fibonacci retracement lining up so perfectly, which is another indicator, I think there's a good chance of a rebound. Now, obviously, like I said, I'm going to say it again, we have zero confirmation of a rebound. The technicals remain 100% bearish outside of the fact that we got a bounce off of the support level today, and the Fibonacci retracement is lining up perfectly with this being the bottom and the weekly chart being at oversold. Those are the three things that are pointing to a rebound, but everything else, the MACD, the RSI, the EMAs, the candles, they're all pointing to the stock market continuing to go down. But I think in the short term, we'll get a little bit of rebound. Now, I also want to point out I'm not always right. I get it wrong a lot. And, as you guys know, that actually happened back, oh gosh, where was it? Last week, right here. I thought, okay, we're going to get a rebound. We're going up. We did go up on Thursday, and then Friday, the market did a complete 180 on us, had the third worst day in Nasdaq history, and just tanked from there. So once again, I think we're going to get a rebound, but once again, I could be wrong. However, I'm confident enough to where I did open some bullish positions today. Now, I want to point out I did not buy call options. And the reason I didn't buy call options is because we had a massive sell-off over the past 7 days. And the problem with having a massive sell-off over the past 7 days is that it made the options very, very expensive due to something called implied volatility, or if you're into the Greeks, vega. And so options are at a very high premium. They're very, very expensive, meaning it's very difficult to actually make money off of options right now. So rather than buying an option, which would have been almost impossible to make money, instead we sold options. And that's why we're up 30% right now, even though the market was fairly flat today, is because by selling them, we're actually making money off of the implied volatility and the theta decay and all of these things. So that's why we're going to make money. Even if the stock market trades flat, we still make money. So I don't need a rebound tomorrow on Friday. I just need it to trade flat, and we will hit max profit. Still, if it goes up, that'll be even better. But we don't need it to go up. Just trade flat or go up. So that's why I didn't buy a call option. They're too expensive. Instead, we sold vertical put spread. That's another bullish position where you can make money. Okay. The next thing that I want to kind of point out is let's go through some news real fast, because I got some pretty important things that are going to be important in the long term. So first of all, when Jerome Powell spoke on Wednesday last week, he said that he was fairly certain. It seemed, well, I'll put it this way. It seemed like he was fairly confident that the Fed could create what's called a soft landing, meaning they could get inflation under control without triggering a recession. Just 1 week later, he is no longer as confident as he was a week ago. And he's now saying that, well, I can't actually guarantee we're actually going to get a soft landing. So this is pointing to the Fed starting to wake up and realize, you know what, we might actually get a recession after all. There's no guarantees we're actually going to create this quote unquote soft landing where we get inflation under control without triggering a recession. So this is bad news that the Fed is becoming a little more awake to the fact that we might get a recession. Another thing I want to point out is that in a bear market, you'll typically get all of the indices that are down. However, we are all of the indices in a bear market, meaning all of the indices down 20% or more. We're not quite there yet. So I want to point out that the NASDAQ closed down 29% from its all-time high. So more than 20%, very well into a bear market. The S&P closed down 18% from all-time highs. So it's still 2% away from an official bear market. So it's more likely that we're still going to get some more room to fall. So I do want to point that out. Now, a lot of this, before I get to the Twitter and Bitcoin and all that, I want to point out that there was some confusion on my video yesterday and, of course, today. And a lot of people might think I'm flip-flopping or whatever. So I want to kind of point this out. Do I still believe that fundamentally the stock market is pointing to a 50% drop over the next year or two? Yes, absolutely 100%. Do I still believe stocks are going to go up over the next 2 weeks? Yes, I do. Those two things can go together and both could be correct. We could get a short-term rally for the next 2 weeks and we could still have stocks go down 50% from here. Keep in mind that when you're in a bear market, stocks don't go in a straight line down. They zigzag. So they'll go down and then up and then down and then up and then down, then up, then down, then up, then down. So that's what stocks do. And let's go back to the NASDAQ chart real fast. And I want to kind of point that out because that's exactly what we're seeing. And that's what we would expect to see. Okay, getting back over to the daily chart here, you're going to notice what stocks have done so far. They have went down, went up, went down, went up, went down, went up, went down. And now I think they're going to go up and then down and then up and then down and continue zigzagging on down until we get down 50% over the next year or two. However, in the short term, I think it's time for another upward trend, right? Just like we got here and here and here, I think we're due for another upward before we continue downward. Okay, so I just want to explain that. These it does not mean I'm flip-flopping. It just means I'm showing you the difference between a short-term analysis versus a long-term analysis. Yesterday's video was long-term. Today's video is short-term. Okay, let's get to Twitter real fast. Twitter's market cap has dropped below $9 billion as Elon Musk's purchase price concerns about the deal emerge, meaning people are starting to think that this deal might not happen. So Twitter shares have fallen to about $46. Elon Musk is going to be purchasing Twitter for $54. Now, if you believe this deal will go through, as I do, I'm going to pull up the calculator real fast because what I want to point out is just how much you can make off of this if you were just to buy it and hold it till the end of the year when the deal goes through. So at $54.20, and we're currently at about 46. We have an $8.20 upside. Take the $8.26. Look at the $46 current level. Upside potential, it's about 17.8%. So if you were to buy Twitter right now and just hold it and the deal does in fact go through, as most people think it will, you're going to make a 17.8% profit on Twitter. So if you think the deal will go through, as I do, now would be a great time to buy Twitter because you're probably going to make a 17% profit by the end of the year if this deal goes through. So I just wanted to point that out. A great time to buy it. Let's pull it up in the actual chart and see where it actually closed. Yeah, $45. That's even better. So probably over 18% profit on this guy if you were to buy right now. It's, of course, not guaranteed. The deal might not go through and we might drop back down to these, $30 level or so. But I mean, at this point, I'm probably going to start adding Twitter to some of my long-term portfolios, even though it's not a long-term hold. Because the deal will go through by the end of the year. But if this still does go through, you're looking at 18% profit here as the market continues to go down. Okay, just want to throw that out there. And now let's get into Bitcoin. So little recap of what's going on in cryptocurrencies. More than $200 billion has been erased from the entire cryptocurrency market in one day as the sell-off intensifies. the price of Bitcoin plunged below $26,000, and Ether or Ethereum dropped below $2,000 per coin. And then, of course, we got to talk about the collapse of Terra USD. Okay, let's get to all of these because we're going to go through them one by one. So let's start with Bitcoin. And if I pull up the chart on Bitcoin here, what I had said a couple days ago is that this level, the $29,500 level, was a very strong support level that had been held and bounced off of 7 times, going all the way back to December of 2020. 7 times it bounced off this. 1, 2, 3, 4, 5, 6, 7. 7 times. And yet, if it fell below, I said this next level of 24,500, it was a very weak level. And the next strong level, which is right here, is at 19,500. So I said if we fell below, we'd most likely get down to 19,500. Well, on Thursday, this sucker dropped 20% right down to that $25,000 or $24,500 level. Dropped 20% in one day down to that level. However, you're also going to notice that Bitcoin was extremely oversold in the RSI here. And here we are on Friday. We're starting to go back up. So it looks like we're going to get some green, going from 25,000 to 30,000 in less than 24 hours. It's over a 20% rise in less than 24 hours. Massive price swings here, but it does look like we're at least getting a bounce here and we're going to go up. And I think Bitcoin and the overall market, crypto market, is going to bounce and rebound along with the overall stock market. So that's Bitcoin. Let's take a look at Ethereum real fast. And I haven't looked at this one in a little while, but basically it's following the exact same path as Bitcoin. I do want to point out this, again, very, very strong support resistance level here. We can go ahead and draw that based upon our multiple touch points going back to about right here. And I'll go ahead and make that line orange so that it lines up with everything else. And we do have touch points here, 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 and then quite a bit of touch points right in here. So again, very, very strong support here. And let's see what happens if we go forward a couple of years. Perfect. It's a perfect bounce right off of the support level. And looks like we are going to continue going up on Ethereum as well. So confirmation on that. Now let's get into the one everybody's talking about, Luna. But before we get to Luna, I have to explain what is happening with the, it's not going to be in Webull. Let me pull up, let's go over here and pull it up here. And here we go, Terra USD. Okay, let me explain what happens with Terra USD because it's a little bit different. So Terra USD, and I got to pull out, let's go maybe a year or so. This will make it easier to understand. So Terra USD is supposed to be what's called a stable coin. And what that means is the value of it is supposed to be pegged to the US dollar. Now, as you can see on this yearly chart, it's not a perfect peg because we do have some, little bounces up and down. I mean, there was a little difficulty getting started where it dropped down to 95 cents. But other than that, it's been, around $1, down to about 99 cents. It gets up to like $1 every once in a while. But somewhere between 99 cents and $1, it's pretty well stabilized to that dollar. But what makes Terra USD or so different, or UST so different from the other stable coins, is that it's not pegged to the US dollar through a stockpile of cash, right? Some of these are pegged to the US dollar through a stockpile of cash, meaning they literally have US dollars on hand. Terra USD does not. Terra USD was pegged to the US dollar through an intricate system of buying and selling other cryptocurrencies in order to help maintain the dollar price. So in other words, this has absolutely nothing fundamental behind it. It wasn't, to put it in perspective, backed by gold like a lot of the other stable coins were. This was just backed off of a theory. And unfortunately, in the past couple of days, that theory has fallen apart. As you can see, we went from this 99 cents all the way down to 24 cents, a 75% drop on something that's supposed to be stable. Now, why is that? Well, as cryptocurrencies started to go down, Terra USD started to go down as well. And the way that Terra USD is supposed to work is if it starts to drop a little bit, it has a sister cryptocurrency, which let me pull that up. That's called Luna. And let me see if I can find it here. I think it's that guy right there. So, nope, definitely not that one. Crap, I can't find it. Where is the Luna? Somebody put in the comments what the ticker is for Luna, if you guys know what it is. Somebody help me out here. Put in the comments what the symbol is for the Terra USD one, so I can find it. Anyway, while I'm waiting to see what that is, I just want to let you know that whenever Terra USD drops below $1, people are supposed to sell their Luna and buy Terra USD. And then when Terra USD gets above $1, say to like $1, they're supposed to sell the Terra USD and buy Luna. And through this little exchange of crypto Luna USD. All right, let's see if we can find it here. Yeah, that's what we have, Luna USD. So I guess the chart's just gone. That's yesterday. Yeah, the chart's gone. It stopped reporting. I don't even know if I can get a chart pulled up. Yeah, this isn't even accurate. I don't know why it's I'd probably just so messed up it's not reporting anymore. But anyway, Luna.x. Okay, not really sure how to find it. But anyway, the point is you're supposed to do this exchange. Well, what ended up happening was as Terra USD started to fall, let's go back 7 days here. As Terra USD started to fall, people started to sell their Luna coins in order to get the price of Terra back up, right? So we had the fall, we got the selling of Luna coins, trying to get the price of Terra back up. But you're supposed to keep selling Luna until it gets back up, until Terra gets back up to $1. But it never did. It only got back up to 93 cents. So what people had to do is they had to keep selling Luna. Well, even as people kept selling Luna, the selling pressure on Terra USD exceeded the buying pressure from everybody selling Luna. And so what that did is it caused the price to continue to go down. And now I'm seeing in the comments that Luna was stopped producing blocks. It was taken off the charts. That probably explains why I can't pull it up over here. But what ended up happening is finally people just ran out of Luna, but the selling pressure on Terra was still there. So it just kept going down and down and down and down and down. Well, part of the problem is as we ran out of Luna, we couldn't get the price of Terra back up. So it has a backup, and the backup was a large holding of Bitcoin. So when the price of Terra continued to go down, what do? They started selling Bitcoin and started buying more Terra. Well, that also helped cause Bitcoin to do this severe sell-off over the past couple of days. Part of that was Terra USD. Not all of it, but part of it. Unfortunately, even with all of that, it still was not enough to get the price back up. And so this stablecoin now has completely collapsed in what is very similar to a Ponzi scheme. In a Ponzi scheme, you basically have to keep paying out, current or old people with new investments. And that's kind of how Terra USD worked. It's supposed to bring the price back up with new money coming in from the selling of Luna or the selling of Bitcoin. But it just got to a point where the selling exceeded the buying and the entire stablecoin fell apart. And this is why we have this whole issue in the crypto market right now. And it's caused a lot of fear in the cryptocurrencies. And people are like, holy crap, if this stablecoin completely fell apart and there's no liquidity left to buy it back up, then what about every other cryptocurrency? Is there going to be any liquidity to buy that? Probably not. And this caused massive, massive selling in cryptocurrencies. So that's why we've seen this huge sell-off in cryptocurrencies lately. So hopefully that kind of explains all that for you guys. The last thing I want to point out before we get to your stock picks is this. The CNN Fear and Greed Index. Now, if you guys don't know what the CNN Fear and Greed Index is, let me explain it to you. All right. The CNN Fear and Greed Index is a tracker. It's kind of new. It's only been around for a few years. But what it does is it tracks how much fear and how much greed there is in the market. Greed meaning there's a ton of buying and everybody's just buying everything. They don't care about valuations. They're just buying, buying, buying. Fear, there's a ton of selling. Again, people don't really care about valuations. They're just selling, 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 selling. And right now, the Fear and Greed Index is at 6. Now, I want to point out that in all the years I've been watching the Fear and Greed Index, I have never seen it get down to 6 before. This is the lowest I have ever seen the Fear and Greed Index ever. If you pull up a timeline of the Fear and Greed Index, now again, I said this was kind of new, but if you pull up a timeline of the Fear and Greed Index, we are at the lowest we have ever been. The lowest we have ever been on the Fear and Greed Index. Because of this, this actually is another really strong indicator for a rebound. The reason is because people are just selling everything regardless of the technicals or fundamentals. They're just selling everything. And typically when you get to that point, this is pointing to extremely oversold. So this is pointing to extremely oversold, meaning more than likely we are ready for a big rebound in the stocks and crypto. All this, you look at market momentum, extreme fear. You look at stock breadth, which is how many stocks are rising versus falling, extreme fear. You look at put and call ratios, we're almost to 1, which means we're almost to the point, not quite there yet, 0.98. But we're normally in the market, we have far more call options being bought than put options. We're at a point now we almost have an equal level of puts and calls. Normally, we don't get a complete and total market bottom until the puts exceed the number of calls. We're not there yet, but certainly we are pointing to extreme fear in the options trading market. Market volatility, how much stocks are going up and down. Again, fear. If you look at safe haven demand, how many people are jumping into gold, silver, things like that, that's pointing, and bonds, specifically treasury bonds, that's pointing to extreme fear. And then junk bond demand, how many people are buying junk bonds as sort of an alternative, again, extreme fear. So everything is at extreme fear. It is the lowest level I've ever seen it at. It is the lowest level in the history of the Fear and Greed Index. And to me, this is a huge buy sign because everybody's selling. I want to be buying. I want to be doing the opposite of what the market's doing. And I told people in the Discord today, I am ready to load up on call options. Now, I'm not going to do it yet. I'm probably going to wait till Monday and let that implied volatility come back down a little bit. But man, this is pointing to a huge rebound. Okay, I think that's everything I wanted to talk about. So let me go through your comments and review what you guys said, and we'll get to your stock picks. So just give me a few minutes here to kind of go through everything. And thank you all so much for joining while I'm going through this. And we have a little pause here. Go ahead and hit that like button. Go ahead and subscribe while you're waiting for me to read your comments. Let's see. Okay, quite a few people are asking about Msft. Let's go ahead and pull that guy up. Msft. And let's see, we're on the daily chart. So you said Msft is up after market. Yeah, 0.8%. It was down 2% on the day. Yeah, everything's up a little bit after hours. I don't see anything specifically interesting here. But what I do want to point out is the 1 hour chart. And this is another indication of a rebound. About right after the market closed, we got a golden cross on the 1 hour MACD. And this is a pretty good indicator for a bounce as well. So again, just more signs of a short-term rebound coming. Let's see what else we got here. You say Wall Street bought into the market into day today. That's a good sign. I see we're talking about large institutional traders. Yeah, absolutely. It is a very good sign. You said stocks will go down 50% more. Scared ready to buy anything. I'm not buying anything either. Long term, I'm not buying anything. I'm just holding cash. I haven't bought anything long term in since what about I think November was the last time I bought. No, before that, October. October was the last thing I bought anything in a long-term portfolio. Uh, for the most part, I picked up a few like really small positions of I think VALE and CLF, but other than that, I haven't bought anything. So, like I said, long term, definitely still very bearish. Okay, let's see. Let's see. Okay, here's a good question. So if I'm so certain about QQQ calls, why not buy TQQQ calls instead? Is it because TQQQ has lower volume? So for those of you guys who may not know, if I pull up TQQQ here, this is an Ultra Pro. So in other words, what happens on this is a leveraged NASDAQ ETF. So it'll go up multiple times faster than QQQ will. The problem is when it comes to an individual stock, like let's say you're not going to do options, you just want to buy the actual ETF. TQQQ would be a better option than QQQ because you can make more money. Now, the risk, of course, is because it's leverage. You could also lose more money if it goes down. But certainly if it's going up, you're going to make money faster than just buying QQQ. However, when it comes to options, options trade based upon implied volatility. And because this is leveraged, the implied volatility is also leveraged. So you don't actually make more money off of TQQQ options than you do QQQ options. The other reason why QQQ is significantly better is because TQQQ is trading at a price of $28. QQQ is trading at a price of $291, which means once you're in the money and your delta gets a lot closer to 1, every dollar the underlying goes up, your option goes up by $1 as well. That's what a delta 1 means. And on a stock or ETF that's multiple hundreds or thousands of dollars, the odds of it going up $1, $2, $3, $4, $5, $6 is much higher than an underlying that's at $30, right? So if an underlying goes up 10%, it goes up $3. If this goes up 10%, it goes up $29. So once you're in the money, call options make a lot more money on the more expensive options. So if you're doing options, definitely do QQQ and not TQQQ. If you're not doing options, you're just buying the ETF, I would do TQQQ instead of QQQ. Unless you're trying to manage risk, then stick with QQQ. Okay, hopefully that explained that. Let's keep going. So just to clarify here, I'm short-term bullish, long-term bearish. I just want to reiterate that. Let's see. So you said stocks are dropping 50%. Now we may rally for a few days, a few weeks. Correct. Short-term rally, long-term bearish. Let's see. I've got a super chat here. Okay. Well, Musica, thank you so much for the $10. You said, I have twin girls, 9 months at this moment. Buy your baby boy some wipes. Thank you all for the negative and positive news. You've saved me tons of money since January. I'm really glad I've saved you money. I also want to let you know that I also have 3 kids. They've all got investment accounts, and all of their investment accounts are in cash right now. I'm still waiting a year or two for a true market bottom before I use their cash to buy any sort of stocks or options. So, I'm right there with you. I'm just trying to save money for them as well. I don't want them losing money in this market. Obviously, I'm not trading their accounts. Those are all going to be long-term until they turn 18. So I'm really waiting to get the best prices. And I'm just waiting for a bottom here before I do anything with theirs. So I get you. So absolutely. All right, let's see. Thank you so much for the $10, by the way. I really, really appreciate it. Let's see what else. Okay, a couple questions about Sofi. Let's pull this guy up. So Sofi went down. This day right here, they prematurely reported earnings. We had a major intraday drop. Let me pull up the 1 hour chart. Might be easier to see. So they prematurely reported earnings. We had this major drop. But then from there, it's gone up. It's been bullish for the last 2.5 days. So Sofi is another stock that looks like it may have bottomed out. I do want to point out this too. When it comes to this 50% drop in the markets or whatever, when the markets go down, you typically see the small caps and especially the high growth stocks, those stocks that really don't have any earnings. It's all a revenue story. Those are the stocks that go down first. And anybody who's been in the market for any medium amount of time, you know that all of the small caps, all the high growth stocks have been dropping since March of last year. So they've been going down for over a year already. Now, at the same time, it is the small caps, the high growth stocks, that are the first to rebound once we hit a market bottom. So even though the overall stock market could drop another 50% from here, we could see small caps, our Russell 2000 stocks, rise even as the rest of the stock market goes down. It's essentially the exact opposite of what we saw last year. Last year, from March onward, we saw our small caps drop even as the overall market indices were going up. Now we make it the exact opposite. We may see the market indices continue to drop while we see small caps go up. So keep that in mind. Even though the overall market may continue to drop, our small caps might start rising from here. So stocks that you have a really strong belief in, you might want to consider, especially if it's a small cap, especially if it's a high growth story, you might want to consider starting to dollar cost average into those, because there's a chance that even if the market continues to go down, small caps will start going up. So there's a good chance for that. So I actually really like Sofi at this price, and I have started to dollar cost average into this one. So I take it back. I said I hadn't bought any long-term stocks since October. That's not true. I did buy Sofi. I bought Sofi a couple days ago. So about $100 worth of Sofi. I am dollar cost averaging into it very slowly because, again, we're still in a really bearish market. But I have started a very slowly dollar cost average back into Sofi. So I'm a buyer at these prices. And like I said, I think small caps will be the first to rebound, and they will also be the first stocks that I start dollar cost averaging into, even as the overall market continues to go down. Okay, let's see what else we got. What's my basis for down 50%? Go watch yesterday's video. I laid out pretty well yesterday why I think stocks are going to go down 50%. Okay, here's an interesting question. Do I still think Tesla will get down to $400? Maybe. That is not Tesla. Let's pull up TSLA. Okay. Daily. There we go. So if we look at the daily chart here, you guys can kind of see further support. I haven't drawn the lines yet, but we have some pretty strong support here around $450, and we've got more support around $385. But so far, I'm focusing on this 540 because we had all these touch points here last year. Now, right now, we can see Tesla's down. It's down over 40%. And on the daily chart, it's at 29 on the RSI. So even Tesla is pointing to a little bit of a rebound in the short term. And yeah, we actually do have support here. I can actually draw this line. I can see multiple touch points back here on where we are right now. So based upon all these touch points back here, I'm going to go ahead and draw another line for you guys. And you can see the bounce here as well as the bounce here. So Tesla does point to a short-term bounce. Long-term, could it still get down to 400? Absolutely. Yep. Over the next 2 years, absolutely it could. Like I said, when we are in a bear market and everything's bad and everybody's selling everything and nobody cares about valuation or anything, yeah, you could see stocks get down to insanely low valuations. And yeah, Tesla could get down to 400. It could get down to 350. It's very, very possible. Okay, and actually this super long-term trend line that held forever, it's completely broken down, so I'm just going to delete that. All right, let's see what else you guys got. Talked about those. Let's see, a couple of people asking about Ford, so let's get into this guy. Thoughts on Ford. Okay, it said we're doing a technical analysis video, so let's go ahead and do that. RSI is oversold. MACD is still bearish. Obviously, candles and EMAs are still bearish. But let's go ahead and pull up some support and resistance lines here. Not quite there. Let's go. I had quite a few bounces right around, just a little higher, a little lower. There, right there. So saw some things happen here. Let's go find the next one. And probably looking at about right here with multiple bounces. A little lower, right there. So that was another one with multiple touch points. And I guess we can come down to this one too because it's pretty strong. Let's go ahead and draw that. And let's go see where we're at. So let's go back to present day. And yesterday would have been support. We should have bounced yesterday. We didn't. We fell. So outside of the RSI, Ford is still 100% bearish. Although we did get this upside down hammer on the candle, which is a reversal candle. So the EMAs are bearish, the MACD is bearish, the RSI is pointing to a rebound, and the candle is pointing to a rebound. So extremely bearish with multiple signs of a rebound. So again, I think short-term rebound. Let's go look a little bit long-term. Same thing, we are approaching oversold on the RSI, but we've fallen way oversold before. So doesn't really mean a whole lot. Let's go look at the monthly for a long-term hold. We just got a death cross on the monthly chart. So long-term, Ford is definitely looking quite bearish. But short-term, it does look like we want to rebound probably back up to around 1450, somewhere in there. So there's my Ford TA. Hopefully that helped. Let's see what else we got. Kimberly says, thank you, Curry, for all you've taught me since November 21. You've saved me so much money. Kimberly, I'm so happy that you've been joining us for the last few months, and I'm glad that we're saving you money in this crazy market. I'm really, really happy to hear that. Thank you, guys. Let's see. Talked about all that. Let's see. Okay, let's see. You think China's on the verge of invading Taiwan? You know, certainly if we get another war outside of Ukraine, that could be something else that pushes the markets down. News-wise, we really don't have anything until the next Fed meeting. Probably till the first week of June. We really don't have any more like real news coming out. So again, without any more news to push the markets down, that's another indicator we could rise through the end of this month before continuing the downturn at the beginning of June. Let's see what else we got. Some people saying you can get Luna on KuCoin. Unfortunately, it's not available in the US, but I'm happy for you guys who are not US residents. Let's see what else we got. Yeah, this is something else interesting. I put this out on Twitter today. You're saying that hedge funds are preparing to cover their short positions and their meme stocks. Well, I got to pull up Twitter and kind of show you guys what I posted today. And then what I want to do is, this was my theory as well, but what I want to do is I want to go and see if we can verify it. So this is the tweet. And what happened is Citadel put out this tweet where they said that they had some sort of like office party or something at AMC theaters. Now, this is the same company that shorted AMC. So what in the world's happening with that? So CNBC said that AMC and GME were rising in what they called odd trading. And I said, I think it's because of the Citadel tweet. I said, Citadel appears to be bullish on AMC, which I think is causing shorts to cover, which is putting more buying pressure on these stocks. So that's my theory. What I want to do is go ahead and go over to Ortex, and let's see if we can have any. Actually, let's see Fintel. It's a little more updated. Let's see if we can find any indication that, yes, in fact, shorts did cover today. So let's pull this up and see if we can find it. I'll start with this guy, and then we'll go down to short interest and scroll on down. And, 400,000 shares, I'm not really seeing a lot. Let me blow this up so you guys can see it on the screen there. I'm not seeing a whole lot of people returning borrowed shares. You had a little bit here, but that was after. I'm not seeing it here. Let's go look at Ortex, see what they had to say. We pull up AMC over here. Oops. And let's go down to short interest. And what I want to look at is utilization, because that's utilization is essentially how much short. Still at 100%. Fintel shows it might be at like 99%, but either way, I'm not seeing any there. So as far as AMC is concerned, it points to that theory being wrong. Let's pull up GME. Still at 100% utilization on GME. Let's go ahead and pull up Fintel and see if that has any indicator of shorts covering. See what we get here. I don't want Australia. Where's US? There we go. Short interest. Let that load. And we've got, no, I don't see any signs of covering here either. So my theory, it looks like, was wrong. It looks like shorts are not covering. There's no indication of that at all. So unfortunately, nope. I don't know why they went up today. I think it's the tweet, but it's not shorts covering. So unfortunately, that's, not a good sign. But that's why we check, right? We have a theory. We go check that theory. In this case, it looks like a theory is wrong. Shorts did not cover AMC GME. All right. Let's see what else we can talk about. Let's see. I'm trying to find other ones that multiple people asking about. I already covered a lot of those. Let's keep it going. Oh, yeah, you're right. Sorry, I forgot about that. I did pick up GLDG. I bought that one as well because gold had been beat down. I think as the stock market went down, I felt like people would start loading up on gold again as a hedge. So that's why I bought GLDG. So yeah, and technically it was looking like it had bottomed out as well. So you're right. I forgot about that one. Thank you for the reminder. I did buy that one as well. Okay. Let's see what else we got. All right, I got a couple of questions about this guy. So Upstart or UPST, let's go do some technical analysis on that guy. So obviously earnings were dismal and we had this major drop here and people are wondering, should I buy in? Well, and I bought at 22.61. We're pretty much there again. Let's go to the monthly chart real fast. And our monthly chart is very, very bearish. Although you can't really do much with the RSI because we just don't have enough data. So this really doesn't help, but maybe the weekly chart can help. So yeah, extremely bearish. It still has not had a golden cross in the MACD. It still remains bearish on the weekly chart. So I don't know. The technicals aren't giving me any indication here. They're not helping. So let's go look at the fundamentals. So Q1 331. We're still up, but it looks like the growth rate is decreased. Still profitable. That's interesting. Let's go look at the balance sheet. 757 million in cash. 760. Okay, so debt exceeds cash. That's not a good thing. Not a good thing at all, especially as inflation starts to go up. That can eat into earnings. So some issues there. Go look at issuance of stock, 10 million. Okay, so they actually didn't issue stock this time. That was good. As far as their cash burn rate, 32 million income. Burn 337 million in a quarter. They got 760 million. So 2 quarters of cash left. They'll have to do another share offering by the end of the year. Yeah, so it looks like growth is slowing down. Earnings are slowing down. That's obviously not good. So the high growth is not there. Let's go look at the statistics. PE ratio, forward PE ratio is at 15. So fair valued. Price to sales ratio 3.8. Again, fair valued. So Upstart right now is at a fair value. If you believe in it, you want a dollar cost average into it. I think it's good. It's at a fair value. My only concern is that because we're in a bear market, stocks don't stop at fair value. They don't stop dropping until they get undervalued. And Upstart is not undervalued yet. It is right at fair valuation. So I think it's fine to start dollar cost averaging in here, but I do think it'll probably continue to drop just because we're in a bear market and we're probably not going to stop dropping until we get to undervalued. So that's my thoughts on that. But fundamentally, yeah, it looks great fundamentally. Technicals aren't pointing to anything. Fundamentals look great. I like it. I actually like that one for a long-term hold. Let's see what else we got. Let's see, energy. I'm trying to. We got more than one person asking about that. Nope, same person. Here's a good question, just trading wise. If the market is bearish, would you consider SQQQ? Yeah, if you can't trade options, I absolutely would consider SQQQ. I have used SQQQ as well as like UVXY and a few others in some accounts that I'm not allowed to trade options in. So yeah, absolutely. I actually, not only do I consider it, I buy it. So absolutely. The only thing is that the inverse ETFs, I just want to put this out. Inverse ETFs are designed to go down over time. So the problem with holding this long term is that you're going to lose money. So if you do buy something like SQQQ or UVXY or any of the other inverse ETFs, I strongly recommend you do not hold those for more than 1 week. Because even if the market goes down, if you hold this for more than a week, you're most likely going to lose money. Now, that's not always the case, and I want to point this out. So we had that market bottom here around December, and we went from 28 all the way up to 62. So we don't always lose money on it if you hold it longer than a week. If the market falls fast enough, you can still make money. But generally speaking, I don't like to hold this for more than a week. Okay, so that's the inverse ETFs. Let's see what else we got here. And guys, I'm going to have to end it here in a few minutes. So let me just quickly, there's a lot of comments here. I just want to very quickly go through and see if there's any others that kind of stand out to me that I got like way more than one person asking about. You know, anything like Mara, Riot, obviously if crypto goes down, they're going to go down. If crypto goes up, they're going to go up. So just look at Bitcoin and you can get an idea on those. All right, you got a few people asking about Aapl, so we'll do that one. Let's see what else we got. We'll talk about Aapl. All right, we'll do two more. We'll do Aapl, and then we'll do this guy because he super chatted me. So again, I know nothing about this stock, but we'll just do some technical analysis for you. Looks like it's a company called Encore. And thank you, Reza, for the $2 super chat, by the way. I really appreciate it. So technical analysis. We'll take a look at the daily chart here. And it is 100% bearish. We are below all of the EMAs. We are negative on the MACD. The RSI is rising a little bit, but that's just because it's kind of flattening out. This guy's 100% bearish. Technically, it points to a continuation downward. We take a look at the weekly. We are oversold on the weekly, which is a good thing. But we're still negative on the MACD, which is a bad thing. So mixed technicals on the weekly, although obviously the EMAs, it's all below. So 66% bearish, 33% bullish. We got enough data. We can do a monthly chart analysis. On the monthly chart, we are bearish, bearish, bearish. So long term, we look like we are going to continue to go down. Short term, it looks like it'll continue to go down. Kind of flat on the hourly. Yeah, 100% bearish. 100% going down. Got 2 minutes left. Let's go take a look at AAPL, and that's going to finish us up. All right, AAPL. Now, keep in mind that Aapl is the most valuable stock in the U.S. stock market. So when Aapl moves, it pretty much moves the entire stock market. But just due to some analysis, first thing I want to point out is we really haven't had a large drop like we've had in some of the other stocks like Tesla or whatnot. We haven't had as large of a drop, but we're starting to, definitely starting to. So this is kind of what we need before we will ever get to a bottom. We need Aapl to continue to go down. But let's just look a little bit shorter term. Let's start with long term. Monthly long term. We had a death cross on the MACD last month. So this is totally bearish. Absolutely totally bearish on the monthly chart. Weekly chart, again, completely bearish. We're not even oversold yet, so very bearish on that. So bearish on the monthly, bearish on the weekly. So long-term, Aapl looks very bearish, like it will continue to go down. Let's take a look at the short term. On the short-term daily chart, we didn't get a true drop here, but we did get a doji candle, and a doji candle is a reversal candle. So EMA is bearish, MACD is bearish, RSI is bearish, the candle's bullish. We have 75% bearish, 25% bullish on Aapl, and this is a strong indication of a rebound. So Aapl looks like it wants to rebound and have a couple of green candles on the daily chart. Let's go take a look at the hourly. We did get a nice golden cross on the hourly chart. This is completely bullish. This is pretty strong. It points to Aapl going to have a green day on Friday. Technically, Aapl looks like it's going to have a green day on Friday, possibly Monday. Daily chart, while being bearish, does show a rebound candle, a reversal candle. But longer term, weekly and monthly is completely bearish. So short-term bullish, long-term bearish. All right, guys, that's going to wrap it up. I want to thank you all for joining. I do want to remind you guys to hit that like button and subscribe before you head out. And if you guys want to know everything I buy and sell before I actually place the trades, as well as my reasons for buying and selling so you can get in on our trades as well, Like I said, we're up 30% on our SPY vertical spreads and our QQQ vertical spreads. If you guys want to make money as the market's going down, come join us in the VIP Discord. You can sign up at stockcurry.vip/VIP. I hope you guys have a lot of success trading, and I will see you on Monday.